It's time for the market update.
Well, glad to have you on the show. Bill, welcome in. I know you're staying busy as always, but how's everything?
Good, Ben. Good. Nice to see you. And we're staying busy. I would say we're staying steady, actually. The market is going through a cycle. You know, in the mortgage world, you know, COVID for us was super busy. And, you know, the way things work, if you have a big boom, you're going to have sometimes a bust after. And the mortgage industry is in that territory. But we've been lucky. We've got a lot of great partnerships in the community, helping people to still buy houses. So we're positioned well and grateful to be in this position.
Well, I know that the home buying never stops, right? Buying and selling never ends. So we got some things on our mind. I know that you probably have some things on your mind as well that we're going to get into on today's show. But I'll remind you, if you haven't joined us before, we're glad that you're here. Bill is a regional president of Cross Country Mortgage. You can find everything we do online at smartmortgageshow.com. But you can also call him at 484-352-4151. Take advantage of his free 15-minute loan consultation. If you're in the market for a new home, good time to sit down, just kind of begin those conversations on what to expect from the mortgage process, what they can offer you, and just begin talking through some of that as well. But we got some good things we want to answer today. And you know, getting into the market to kind of kick things off, Bill, you're kind of talking about where we are, but I think kind of peeling back a little bit, because I don't think we've changed a whole lot, right, since October into November in terms of rates and that sort of thing, correct?
Yeah, so rates have gone up a bit, and right now we're sitting for a 30-year fixed just below 8%, so 7.99 would be a 30-year fixed rate mortgage on average. So rates are continuing to stay high, maybe longer than what a lot of economists thought.
Yeah, I know we talked about that a little bit on the last episode, so go check that out. But I know you wanted to kind of get into a little bit of the historical angle on this as well, because, you know, people still hear 7 and 8 and kind of freak out like, oh man, we were just at 2 or 3, right? I could have gotten a great deal. The rates are still super high. You know, I got to wait. But when you kind of pull back and you look over the history of the real estate market, 7-8% is actually still pretty favorable, correct?
7 or 8% historically is a really good rate. Now, some of the millennials who only knew 2, 3, and 4%, they've never known anything different, right? But the older that you are, you've seen quite a few markets. So absolutely, the rates are not terrible. Higher than we would like, but certainly, you know, buying a house is still a good investment. And here's one of the things that, you know, I want to clear up, because the purpose of this show is to disseminate good information. And there's a lot of, you know, bad information out there. We get fed a lot from a lot of different sources. So I always like to look at the data. Whenever we put a loan estimate in front of a customer for a refinance, I always say that the numbers on the page are going to speak way louder than I do. Let's look at it in writing. So when we look at house values locally, where I am, right? So Chester County, Pennsylvania, Delaware County, Pennsylvania, Newcastle County, Delaware. So like southeastern Pennsylvania, south of Philadelphia, our values have increased considerably through COVID, and combination of a lack of inventory and very low interest rates. Now, we're out of COVID. Most of the economy has resumed back to normal. We still feel some inflationary pressure. Rates are close to 8%, but our housing market continues to be strong. And that is one of the things I want to press home here today is, are we going to see a bubble? Is there a bubble? Is it going to bust? Are house values going to plunge suddenly? And we don't think that's going to happen. And we wanted to talk to you about why we don't think it's going to happen.
Yeah, I'd love to hear some of this information as well. And, you know, if we can, we'll probably share some graphics, some visuals with you as well, because I think it's important to kind of paint the picture and explain that, because I know that is a big concern. I mean, are you hearing that quite frequently from people, Bill? Like, hey, are we in a bubble? Should I wait? Because I've heard, or my friends told me that, you know, the market's gonna collapse at some point, and I don't want to be at the top end of this thing.
Yeah, and by the way, I mean, you just made a good point. You know, a lot of times it might be a friend that says something and they mean well. Yeah. And they're getting information from maybe not the most credible source. So in what we do, we need to make sure that we're disseminating really good information. And we can't say that buying a house is right for everyone. There are reasons why you would not want to buy a house. If you were going to, only be in the house for a very short period of time, it might not make sense to pay closing costs buying and selling in a short period of time. And there's some other reasons as well. But for most people, we're hearing a lot of people say, I want to wait because we're trying to wait out the market. And trying to time this market could be a really big mistake. So there's a lot of talk of recession. So one of the interesting key metrics that we've been looking at is that in 8 of the last 9 recessions, house values have increased through the recession period. The most recent recession being COVID, which is kind of like a synthetic man-made recession because we just closed everything, right?
Right.
But the one that I think that people point to most is 2008. And it was very recent and it was very dramatic. So it's left this, scar. But technically 2008 was different. So of those 9 recessions, that's the one was different where values went down. But the values went down because the recession was caused by the housing and the lending crisis, right? It's not like the housing and lending crisis was caused by the economy. Mm-hmm. Okay. So at the core of it was housing, and that's when we saw housing decrease. So highly unlikely that if we go into a recession, we're going to see another decrease in house values.
I saw something online, a stat that said like 64% of Americans would welcome a recession if it meant lower mortgage rates. So it's interesting. I think we just assume, hey, a recession means it's going to be a negative in terms of like house values and stuff. But you're saying the opposite, that typically doesn't necessarily correlate.
Doesn't necessarily correlate with house values. But if you think about it, Ben, really good point. A recession's probably going to mean lower mortgage rates. And when that happens, you're going to have more buyers. So now you're going to have more demand on a market that inventory is already very low in, right? So when, again, pointing back to 2008, inventory levels were, there were 4 million homes on the market in 2007. Right now, there's about 1 million homes on the market. So there's a lot of demand and not a lot of supply right now. So further reason why we think house values will continue to climb. And if you look historically, in roughly the last 80 years, in 73 years, house values have increased. Only 7 years have they decreased, and 1 year did they stay even. Okay. Now, 5 of those years were through the Great Recession. Only 2 other, in 80 years, 2 other times did house values decrease, and they didn't decrease by much. But very interesting is if you look in 1943 through 1947, over the United States, on average, house values compounded 118% increase. So that's more than the increase that we've seen through COVID. But people are thinking, we saw a big increase, there's going to be a crash. If you had tried to wait out that market, you would have waited 43 years
Jeez.
For a value to start decreasing. So I hear a lot of people say, I'm going to wait until the values come down. If history is any predictor of future, and lots of time it is, you're going to wait a long time. So we feel like there's a lot of data that suggests that values are going to continue to increase. We live in a great country, and the housing market is housing is the largest sector, the largest industry in our country. It's very well supported, and we feel like it's going to continue to increase. Now, it's not going to increase the way that it did through COVID. Those numbers aren't necessarily sustainable, but the values will continue to increase over time. And if you're waiting, you might be waiting a long time.
Yeah, it seems like it's kind of like timing the stock market, right? You have to be right a couple times, right? You're trying to find the perfect rate plus the perfect house, and you're trying to catch it at the right spot in the market in terms of value. It's almost impossible to do. And to your point, I mean, if no matter where you bought, I mean, you've pretty much been in a better position years down the road, right? And most people aren't buying a house to necessarily turn it over in a year or two and making it's some kind of income off of that, right? It's more of an investment for the future, and it might not be the absolute best time to buy, where it was maybe a couple of years ago potentially, but it's still a really good time to buy, and you'll often be better off having made that investment rather than waiting around. So it's kind of like anything else, Bill. There's not perfect timing, right? You just kind of have to find your spot, and if it makes sense and you're ready to move forward with a house, this is probably as good a time as any.
It's not timing the market, it's time in the market, right? Mm-hmm. And Warren Buffett's famous for saying he can't time the market. So I don't know how I would expect to be able to do it if he can't.
Right.
But yeah, you're right. It's about, not looking for the perfect rate and the perfect house that's going to increase at the perfect time. What it is getting in the market, and over time, you will experience gains.
Very good reminder. And I know that's, the rates continue to kind of stay where they are, ticked up a little bit in November. I mean, do you anticipate anything over the next couple of months, Bill, that could shift things one way or the other? Is there anything on the horizon that you're keeping an eye on as we close out this year and then move into 2024?
Yeah. So what we're seeing that when the Fed came out and said we're going to keep rates higher for longer, the market made an adjustment. We feel like the market has adjusted to that language, which is right around an 8% interest rate. Now, if the Fed comes out next month and they make some comments that would not be good for the bond market, then rates could go up. But on the flip side, what we're seeing is looking at key inflation figures. And if you look at CPI, Consumer Price Index, measure of inflation, but you break down the core components, inflation is coming down, not in every area. Because when I say this to people, they say, well, why isn't, a loaf of bread coming down at the store? And, every time I go grocery shopping, the bill is higher. And, that may not reset, right? Because if inflation cools, it means it just might stay at that level, and future increases will not be as, egregious as they've been in the past few years. Mm-hmm. So looking at those inflation numbers, though, they are coming down, and as they come down, interest rates will come down. So we feel like probably rates are going to remain high through the end of the year. Some rate relief will hit 30-year fixed rate mortgages and the broader mortgage market in 2024.
All right, very good. Well, good look at things, some good perspective to kind of keep in mind. I know when we're in the middle of this, it can be kind of frustrating if you're looking to buy a home and you're hoping the rates will drop, and they haven't over the last few months. So it's a good reminder that, still probably a good time to buy, and history has shown us that. But if you want to begin that conversation, you want to sit down with someone, going to encourage you to reach out to Bill over Cross Country Mortgage. Find him online, smartmortgageshow.com. Not only do we have our podcast, we have videos up there as well. You can find all that information there. But you can also call 484-352-4151. Bill's office is located there in Chadds Ford, Pennsylvania. But again, everything is online at smartmortgageshow.com.